Hey guys, this week we have another exciting show of Dividend Talk. After 3 weeks of having guests on the show, we are back as a duo to talk about things like Heineken's brand new slogan. We look at 3 earnings reports from companies whose share price dropped directly after earnings. We take a look at our Q2 performance and we answer questions from our brilliant community. As always, you can check in with us on our socials, and we also have a premium service if you'd like to dig a little bit deeper into dividend growth companies. As always, we hope you enjoy the show and we'll see you on the inside. European DJI, it has felt like an age since we last spoke. It must be 3 weeks ago, I believe. I know the podcasts kept coming out. We had some guests that we pre-recorded, but man, it's good to see you.
Yeah, likewise. Well, I was on vacation. I'm
I
going
know.
again next week, to be fair. So next week you're on your own a little bit on Friday. So I hope you will find someone that can co-host it with you, Derek. I'm sure there's a listener that wants to volunteer. So if you want to volunteer, please do reach out to Derek or myself, and I will forward you. But yeah, no, it's been good. I enjoyed the vacation. And yeah, but I kept an eye on the market. And there are so many earnings going on, and it's a hobby, right? It's not work what we're doing.
Yeah.
So
Well,
I can't ignore the fact that in the morning at 8 a.m. European time, I'm refreshing the Quarter app to see if the earnings already are in. And sometimes Quarter is very interesting because they are sometimes quicker than the investor relations team being able to publish it up on their own website. So there must be somewhere a place where all this stuff gets stored or something like that centrally, and where it can get distributed or so. Or they are just very quickly and figuring out where on the investor relationship it is available, and they just haven't put it yet on the right page so that I can quickly find it. But what an app, Quarter! It's amazing.
It's good. It's a good app, and I love how you can have your calendar and you can it'll remind you.
Exactly. Yeah, I've got totally pre-configured. So I've got I think 150 stocks selected there. And then I just filter on the calendar and I stay up to date on everything.
Awesome. Well, I have to say you're much better than I am when I was on vacation, everything was turned off, phones, everything. So you do a good job at keeping up.
Yeah, probably on the next vacation, this will be more the case. Now I didn't have a beach vacation. Yeah, I was more traveling around and everything. So it's different. But next week it will be just a book. My wife rented from the library. What is it? How to Kill a Mockingbird?
No way! To Kill a Mockingbird. I read that from my leaving cert. It's one of my favorite books. I saw
the movie, I think 2 or 3 times, but I never read the book. And she found a book in the library, and she thought it would be nice. I thought like, oh, that's cool. Yeah, let's read this one.
Nice book.
Something non-finance.
I love the book, so enjoy it. Yeah. But hey, look, a lot has happened. We've had 3 guests on our show, and we were lucky enough to pre-record. But we got a question on our Discord channel from I Will, and it is around our reflections of our podcast with both Renee and Wall Street Wildlife, because they were more orientated towards a growth investor's mindset rather than dividend growth. So give us, what are your reflections? What are your thoughts? What did you learn? What did you not learn?
Well, I was definitely out of my comfort zone sometimes when hearing them talking here. And first of all, we see those people in person, right? We speak before the podcast, after the podcast, and they were so friendly, really, really humble, friendly, and really nice to connect with, and people you just want to drink a beer with. And I hope also that people notice that in the podcast. Yeah. So, and I think also what I always notice with our guests is typically mutual respect for the strategy, not too much judging. While when you're on social media, for instance, on X and everything, there's often this total return people, they can drive you nuts. Yeah, there's no other way to get rich in the world than total return or something like that. And that's something we totally didn't experience. So I want to make that clear as well, that I really felt that. Look, with Renee, he's more into growth, and I guess he figured kind of out when to buy and when to sell, and that he feels comfortable with that. It's something that I always struggled with. It's just my character. So it just doesn't fit me. But it was remarkable to hear when he was listing companies that we say oh, this one paid a dividend, that one paid a dividend. And I think that's where we kind of hit each other at the middle of the road, saying like, actually, you know, dividend is not just dividend investing. We're just as equally interested in growth. And growth investors often have dividend growth stocks in their portfolio while not knowing it, when they are not investing in late stage growth. Like when people are investing in Google, you're investing effectively in a dividend growth stock. It's not recognized as a dividend growth stock. Yeah, and even Microsoft today or Apple, because of the low yield. But if you bought them like half a decade or a decade ago, before this whole run up at a 3% or a 2.5% yield, it was classified as a dividend growth stock. Yeah, so it's one of the learnings as well, like that one doesn't exclude the other. And I think how do you call this when you put two circles over each other? You have the growth investing, dividend growth, but then
you intersect them. Yeah.
There is an intersection that I think many people are just not aware of, and that's one of the things that became very clear to me, because in the end, when you look at how growth our Renee thinks, there are a lot of quality aspects that we also take into account when evaluating companies. Just the style, it was again a confirmation that I can't sleep well at night with a growth portfolio, purely oriented around growth. To see a drawdown on your portfolio 50 or 60% in 2022, I just can't sleep well with that. Now, with the wildlife, Wall Street Wildlife podcast, that was a total different vibe, but I enjoyed it so much. I really felt like we're on the same wavelength when it comes to, you know, just having fun while investing. Yeah. But if we talk about out of the comfort zone, oh my God, Christoph, how that he had to, you know, wait a few years with his retirement and such. I mean, talking about not sleeping well at night, I would have insomnia with such a portfolio. I would be with the doctor asking for pills every week because, my God. But hey, it seems to work for him, right? I mean, he feels comfortable with it.
Very
he makes
knowledgeable.
profits. He has his winners. He has his losers. But like they said, that they are kind of poker players. So I guess they do like they don't expect every hand to win. As long as a few hands win, they're good. Yeah, I don't understand that kind of stuff. I just don't understand gambling anyway. So, and the question is if it's gambling. I think if we would say that, that's with total disrespect, because they do their due diligence. They do read up on the companies. They stay informed on that. So
yeah.
But in my world, in my perspective, if there's such a risk associated to it, that's insomnia stocks. I would call it.
Like a couple of things stood out for me. So I think with Rene, he was a little bit more focused in terms of his lane and in what he invests in, and he had a clear set of rules.
Yeah.
It feels like with Christoph and Luke, they've a little bit more of a wider range. And if you listen to their podcast, they update their portfolios, and it's quite clear they do that. But in saying that, Christoph made a comment that he'd invest the way he does because he wants to learn about the world, and he does. In fairness, given the wide range that he invests in, he learns so much, and he was able to impart so much knowledge onto us. It was kind of incredible.
Yeah, with the philosophy, that was so interesting.
It really was. And you can see that then in Luke's portfolio as well. And he's starting to edge a little bit over into income, just a small bit.
Yeah, Luke is different than Christoph. Christoph is for me much more risky. When I heard Luke talking about how he's roaming off profits effectively by, refreshing his balance account, cash balance on the account so that he can live from it. This is also how we know some retired dividend investors live, right? They just let the dividends come in, and at a certain moment when they draw down too much, they will refresh it with other dividends coming in, right? Luke had a quite conservative approach compared to Christoph when it comes to growth investing, I would say. It was much more focused a little bit on the income generation, but income generation out of stock sales, yeah? And to your point, he started to be curious about some more income like Rex and such. And later on, he has a question as well, which is also interesting.
And you made the point. What's funny is there is a lot of crossover in terms of if companies like ASML, they were talking about Novo Nordisk, Microsoft, all these companies that are considered growth are actually staples in our dividend growth portfolio. So there's a lot of...
But we always make the claim that in the end, everyone becomes a dividend growth investor. And well, Christoph, we might not have that time anymore left in his life to get there. But with Luke and Renee, I wouldn't be surprised if later on they will at least classify a part of their portfolio, significant part of their portfolio's income.
Let's see. But hey, look, two great guests, I have to say. Really enjoyed both podcasts. It was strange having four people. It was the first time. I didn't know how that would work, but it actually worked really, really well. And we will be joining those guys soon. So I cannot wait for that.
Yes, and then we will have to defend ourselves a little bit on why investing like grandparents, like the two Muppets.
Well, we've thrown out some claims here, so I'm sure we're going to be challenged. But hey, bring it on. That's what we're here for.
Exactly.
So let's move on to some of the news of the week. And I have to say, you've been keeping up with this a lot better than I will. But I do love.
Hey, we've got each other's back. You're a bit busy at work. I was the other time, so don't worry. But I wanted to just share the first one. Have you seen the slogan of Heineken? I was going into Heineken's presentation the other day, and I saw like, oh my God, this is it, right?
I do. You sent it to me as well at the time, and I call it out. It's brew a better world. I mean, come on.
So we have this is something for sin stocks, right? Like how to throw smoke and mirrors. We have, of course, the classic "Build a Better Tomorrow" from British American Tobacco. Heineken comes with their own spin on it: brew a better world.
I mean, I love how they put that, and then beside it, to have responsible Heineken 00 hits the big screen. Like, come on, like it's like someone was just sitting there going, okay, what can we say here just to reel people in?
I've honestly, and it may not sound appropriate, I just think that this is some wokeness in the marketing department or something like that. Truly believe this stuff, and then they have a workshop. They go somewhere to an offsite location, do a workshop for a whole day, and then they start, like, I don't know, drinking their ice latte macchiato, and then someone comes with this, and nobody dares to challenge them because it sounds so like hippie style, modern, Gen Z, whatever it means. I mean, no normal CEO comes up with this stuff. But in today's world, in many companies, it's hard to challenge this kind of stuff. That's a sad thing. Do you think that the guy from Palantir will come with this?
I mean, but like, what is there a purpose behind it? Are they trying to like get rid of this sin stock vibe that they have and push like 00 as being healthy, and that they're like brewing their way to a better world? Like, what?
I truly believe that those people are just happy working there in the marketing department, the HR department, and that they truly believe in this stuff. I truly believe that this is like they're just totally outside of this world.
In my opinion, the fumes from the alcohol must be getting into their system. They must be walking around drunk all day.
Yeah. But Derek, I have experience running into people from a tobacco company, I will not list the name, where I was speaking to them, and this was at a fair in my industry, and I was speaking to them, and he said, like, we are not a tobacco company, we're a tech inhalation business. And they believed it. I looked into their eyes. There was no doubt at all. This is kind of the dogma, the belief that starts to operate in a company. This is kind of the management shit that you hear everywhere when you work in a corporate. Yeah, people start believing in this stuff. It becomes a corporate strategy. It gets kicked down. People just start to do it because they want to get, I don't know, they want a good performance rating. I don't know what it is, but it's cool.
For that to happen, it comes from the top down. It comes from the CEO, and it filters down.
Yeah. But imagine there, like you have these coffee drinking people the whole day, and they just really want to do a small little wordplay. It sounds so nice. I mean, you need to understand the culture a little bit sometimes in these corporate, right? They are busy with all this kinds of stuff, and then they have their whatever days everywhere all the time. Like then it's like the LGBT plus and whatever else in the alphabet month. Then it is this kind of day. Then it's kind of that day, and I mean, there's nothing wrong with doing good for your employees. Don't get me wrong, but brew a better world. Who comes up with that is like, I mean, oh my god! I wonder who believes in this outside of Heineken.
So I just have to have a little deeper look into what it actually means. Okay, so what they're trying to do is achieve carbon neutrality, reduce their waste to landfill. Okay, ensuring a positive water impact, especially in water stressed areas. I don't know how you're going to do that by brewing Heineken. Promoting gender balance and fair wages, supporting social impact initiatives aligned with the UN Sustainable Development Goals, and offering customer choices, including innovation in non-alcoholic beverages and promoting responsible drinking without the harmful use of alcohol. So what they're trying to do is they're trying to care for the planet, people, communities to foster a fairer and healthier and more sustainable world. You tell me, where does Heineken fit into this healthier world?
I don't know, but I didn't hear anywhere the shareholder, the one that they are responsible to, the one that actually owned the business.
Well, if you're a shareholder that is consuming lots of alcohol, maybe.
Yeah, but you know, this is like, if you want to brew a better world, what they're effectively saying is we should stop brewing. If you listen to
pretty
them.
much. That's my point.
Why do you want to invest in a business that wants to exclude itself from the world map, remove itself, terminate itself from the capitalistic system? That's what it comes down to.
Yeah, all this for a slogan. Yeah, it's not for me.
Yeah, I mean, and then they are sponsoring everywhere Formula One. Yeah, nice. All the CO2 coming into the air, all the waste of all the technology that's going, the tires, the rubber that's on the roads. Like, who needs 3 pairs of tires in 1 hour on a car?
The irony of that, like an alcoholic beverage company sponsoring a driving sport, they can't mix.
To brew a better world.
You can't write this. You can't write this.
For me, this makes Heineken already kind of uninvestable.
It does to me.
I mean, they should just stay true to their nature. What they're really doing is just having people have happy times together. Focus on that. Yeah. And I'm totally with it. You don't benefit from having alcoholic customers because they're only alcoholic for some time. They kill the rest of the family. That family will never drink alcohol again, and they will die early. So there's an incentive for Heineken to not make people alcoholic, let's say, if you want to protect revenue. But all the other shit there.
Yeah.
I mean, you wanna use less water if it's possible somehow. If it brings down the cost of your operations. Yeah, if you can put solar panels on all your beer bottles, beer caps, and therefore you save energy and it saves cost. Why not? Can it be just a win-win situation? There was something always like people, planet, profit. Yeah, that was the old kind of sustainability thing like 20 years ago. There was profit in there. Yeah. I don't hear that. I don't hear shareholder there. It went too much to a direction that I think they totally lost their mind with this. Anyway, we spent already so much time on this, but I just had to share it with you that I found another idiotic slogan, brew a better world. So it goes onto the list with building a better tomorrow. If our listeners have other of these kinds of stupidity, please share it with us. I'm trying to make a list.
I mean, we're 15 minutes talking about this, and I'm looking at the length of the content we have to speak about. I mean, this could be a long podcast. So let's move on to Wolters Kluwer, shall we? It's a bit of a hot topic because of their sharp share price decline. We got a couple of questions on these from Dividend Jedi and also Dividend.H. So Dividend Jedi said Wolters Kluwer is approximately 30% from the highs of February 2025. Despite a solid earnings report last week, is the fear of AI disruption real for companies like them? And Dividend.H then is also on the same pattern, asking about the business growth perspectives. Is the CEO change anything got to do with it? And is it still a quality business with a good valuation? What are your thoughts on this? It's a company.
Well, a lot of questions in one, and I haven't gone deep enough into some of the questions that people ask. But simply said, in February, the stock traded at 180 euro. It trades now at 118 euro. I call that a significant decline, 25-30%. It's generally 20% down from last year. Honestly, the last 2 days, it was really dropping fast. I think it declined by more than 10%, at least in the last week, which is quite sudden. I can't find a clear reason for it. I've been doing some research. It's not like something written there. There were actually even upgrades by some Dutch banks, like I think upgrading the fair value price. So that's also weird in that context. So there are two things that I can see. At a certain moment, it can be just technical selling. Yeah, it goes through some boundaries and it just continues therefore to trigger some sell actions on the trading side, but that would be too easy. Another narrative is about AI starting to influence their business. But then I wonder, why the last 2-3 days suddenly? Someone woke up. Yeah, on the Dutch forums, there's a reference around Gartner as well, having done some I don't know, predictions or something like that, forecasts. I do think that AI is a real threat to the company. The company is aware of that. They have, if you go to their, I thought it was Capital Markets Day or something like that. If you go through their presentations in general, they're highlighting that they see this as one of the opportunities actually to apply Gen AI. But it's not easy. You can't have Gen AI that's hallucinating. Yeah. But on the other end, there's then a startup, Harvey, that I saw in the news, like that got 300 million in another round of funding, valued at 5 billion now, giving this kind of Gen AI support to in the legal space to lawyers and everything when they're preparing the cases. And I wonder, first of all, to what kind of database do they connect it? Yeah. And if it's just ChatGPT or something like that, is Gen AI that strong already that it's not matter, that it doesn't matter anymore if you have all this content, curated content that Wolters Kluwer has from the last 34 years? Because there are some cases sometimes where they did research and that where it demonstrated that an LLM just trained on, let's say, the internet is not necessarily worse than such high quality databases. Yeah. So I don't know. I'm not in that industry, but I just think like it's a real threat, I believe. And with these kinds of classic businesses like Relax and Wolters Kluwer, they haven't been challenged like this for ages. So if there suddenly comes a startup with a good funding behind it, I wouldn't be surprised if they suddenly start to eat up some market share there. And then it becomes a real threat if there's not a lot of competition in this area. So I think it's something that people just need to be aware of. But on the other hand, I also look a little bit at Wolters Kluwer with Microsoft when the cloud came. Suddenly AWS was growing the whole cloud. Microsoft was not there, but they had the lock-in with all the customers with Office, SQL, the whole suite and everything. And they were able to turn this into a cloud setup because they had the long-standing contracts. SAP is doing the same now. Yeah. So Wolters Kluwer at least has it. It's all in their hands. Yeah. It's not like I feel like it's up to the startups and they need to lie awake like when Netflix came. Yeah, there you could really see that it would be difficult for AT&T and all those. But with Wolters Kluwer, I have a feeling it's all in their hands. Yeah. It's all in their hands. If they get the technology out, there's still space maybe if you look at the pricing, maybe they're overpriced. But generally, it's all in their hands.
Yeah, I think long-term AI is probably a big competitor to them for companies that go down that route. But you would imagine that companies like Wolters Kluwer will pivot in time to use AI within their own systems and make their own systems. So I agree with you. I think it is definitely in their hands. I'm not completely worried. Their financials are rock solid. I had a quick look. They are highly they have a lot of institutional ownership. I think it's like over 50%, 54, 55%. I remember reading your article on this. And a quick look there looks like that the share price drop is due to institutional investors kind of selling out, but that could be because of the high valuation that you said,
Or the
or
CEO
the CEO
change.
change. You know what I mean?
Yeah, big, because we see the same with
Yeah,
Berkshire from Warren
exactly.
Buffett, since he's gone, also dropping
Exactly.
price.
So I
So
think the share price drop looks to be more in line because of those reasons rather than something fundamentally changing.
yeah,
So
but there, to be fair and to be clear, there's nothing in the news or anything where it tells me, okay, this is it. So we're just simply talking now about a price chart and speculating that we understand what is happening
yeah,
here. And honestly, I don't know, but these are the kind of reasons that are circling around on social media. For me, AI was already a risk, let's say 3 months ago. So I just wonder why now suddenly in 2 days, 10%
yeah,
down, or
yeah,
in a week. Yeah, I don't, there's nothing for me that changed in the last week that makes me wonder, like, or makes it like, aha, yeah, no,
yeah.
justified. Yeah,
It,
10% down.
it
I
would
don't
take a
see it.
while for you to train the AI to the level you expect, and then you need the adoption to come after that. So it's not going to be.
Yeah, but if you have a startup with, let's say, 6, 7 hungry, I don't know, Stanford people that are willing to sleep on the floor under their desk, work 18 hours a day, and then you have a Wolters Kluwer where people work 8 hour a day, a 4 hour net, and the other 4 hours is coffee drinking again, then yeah, that's what you're competing
Yeah,
with, right?
yeah. But you've also got a massive head start.
That's what you have. That's what you have. But you have also this. Yeah, you're a tanker. You're not a small
Yeah,
race boat.
yeah.
So, it has its benefits, but also its
Exactly,
disadvantages.
exactly. And look, it could create a good buying opportunity. Still a little bit low on the yield side for me. I think it's nearly still sub 2%, maybe even 2%.
Yeah,
So it's still a bit low, but
yeah. But it's becoming more and more attractive now. This is the pullback that we've been waiting for with Wolters and Kluwer for many
yeah, yeah.
years. Many
It's
years.
the psychology of it all. We speak about this. We want companies to drop share price. You need bad
Yeah,
news for that to happen. When it happens,
exactly.
then that's when you need conviction, and that's why we say you can't
Exactly.
borrow conviction. So
Exactly.
quite quickly then, maybe to have a look at some earnings. What are your thoughts on both Novo Nordisk and Eli Lilly? I know we got some questions on these from Ikrivi and Mick Slater.
Yeah, so I looked into both, right? It was really interesting. You saw Novo Nordisk, was it dropping
Yeah,
20% or 15% or 25, but it went under 300 Danish crowns per share. It went under the $50 for the
yeah,
American ADR equivalent. I think we haven't seen that in 3 years or something like that. Still growing 18%. Yeah. Novo Nordisk, by the way, hiked the dividend also by 7.5% or something
yeah,
like that. So still growing 18%, Novo Nordisk. Eli Lilly, of course, a little bit more. They've been growing, was it 38%, something like that? But the non-GAAP earnings 61%, Eli
yeah,
Lilly. So, but when Eli Lilly numbers came out, then Novo Nordisk shot up almost 10%, and the next day again 3-4%. So I think the earnings in the season don't matter at all. At all. There's nothing why the share price reacts. Novo Nordisk was going simply down because everyone thinking like, well, bad management, they had to change the CEO, they're not in control of the compounds, all this stuff. And then Eli Lilly comes in and they say their oral pill, orforglipron, they had only 12.4% weight loss, which was a big relief because Americans are better in selling their pipeline and selling their
yeah,
business. Yeah, so there was a lot of hype around Eli Lilly, and then it actually shows that Novo Nordisk with their item in the pipeline is having about 15 to 16% weight loss. So suddenly Novo Nordisk looks a bit better again in this regard. So I mean, there's just the war on fat people. That's what we're talking about. Yeah, and we want to move from a needle to a pill.
yeah.
So and it makes Novo Nordisk and Eli Lilly definitely not a sleep well at night stock at the moment. And I just hope, because I saw so many people investing in Novo Nordisk, I just hope that they know what they're investing in. There's so much risk in this
Yeah.
pipeline. Yes, valuation today looks really good, but can you still give the same weight to future earnings when their patent is not being protected at the
Yeah.
moment? They filed 1,200. I don't know if it's lawsuits, but at least they wrote 1,200 letters, let's say, threatening with lawsuits. Yeah, something like that. So, but yeah, there's a lot of much more risk involved. And again, it comes now to conviction.
Yeah.
And one thing is hard in pharma stocks: you need to understand the biology, you need to understand the pipeline behind it. If you don't understand it, you're to some sense a little bit of speculating. That's why I always say look at the portfolio diversification. And then Novo Nordisk is not diversified. I think they get 65 or 70% from this stuff around GLP-1 and everything. So yeah, it's not like the top three are all together generating 30%. So if one goes down, you don't need to really worry. No, here you need to worry when things screw up.
Yeah.
So it's just like, guys, just don't just buy because it looks good on the technicals. Try to understand the pipeline. Try to understand a bit the competition, what they are having. Really do your research.
Yeah, which I have to. I'm the first to admit it's quite difficult to do that for pharma companies, and I've spoke about this. I've wrote about this. It is difficult because then you like to read about it. You have to understand the science, which most of us won't. So then you're reading the annual reports or whatever documentation you can find about that, which is usually from the company, and it usually presents them in as best light as possible.
Yeah.
And unless you understand what these drugs are for, what the use case is, what the side effects are, it is so difficult. So,
but you can ask about it. For instance, Kalin today on Discord shared a nice picture about how the competition looks like and what they have in their pipeline and where the gaps are in the competition. That's very insightful. That's a good starting point. And then you have ChatGPT where you can upload this picture and you can explain what's in the pipeline in simple language, something like that. And then I've tried this a few times. It really works.
Is that the same ChatGPT that's going to collapse Wolters Kluwer?
Maybe no, but look, those companies, they use a lot of pharmaceutical language. But if you use, for instance, those pipeline names that they use, like GLB.IR or something like that, and you upload the Novo Nordisk stuff, you can ask them like, what does this really mean? Yeah, for me as an investor, what should I understand in this in simple English? I'm not a biologist. It really explains it well, Derek. Really explain. And then you come to the conclusion, okay, it's about oral. You need to understand the prospect of weight loss, because when you want to lose weight, that's what you're interested in. You're interested in side effects. So you can also ask, who has the worst side effects?
What's funny is Novo Nordisk has now been associated with weight loss. It's a weight loss company, when really it's a diabetes company.
Diabetes,
which is something I'm passionate about, and
but it's struck gold. It won the jackpot.
So funny. Like 5 years ago on the podcast, we're talking about diabetes, and now it's a weight loss company.
Insulin, all this stuff. Yeah.
So, and I still believe in the diabetes part of this company. By the way, it's.
Yeah, I mean, Novo Nordisk is just a very strong company. Management has just been screwing up. I think they're not experienced in managing such rapid growth. Then it's in the States. I think that if Eli Lilly was knocking the door on the FDA, they would have intervened, because they would just talk with a few senators. Here you are, a Danish company. We've seen it with Volkswagen. We've seen it with Bayer and Monsanto. When you're a European company, doors don't open easily in the States. Yeah. So. Yeah.
C'est la vie. UnitedHealth. So that seemed to cause a bit of a stir in our Discord group, I have to say. What were your thoughts on their earnings?
So I don't remember exactly anymore what it was about on Discord or Facebook, but on X, many people, specifically our American friends, are head over fist going into UnitedHealth. It dropped initially after this investigation, this probe by the DOJ, I believe, about their practices. Also, I thought around Medicaid and such. And then the price went from, I don't know, you remember, it was trading in the 500 or 600, and then it went to 260 or 280, and it bounced back. And after earnings, it dropped again to 250, while many people were expecting or hoping probably for like they bought the dip already, but now the dip continued to dip.
Double dip.
It's now, it's so, simply said, lower earnings by 20%. That's a lot for such a company. Yeah, when you think about an insurance business, healthcare insurance, to suddenly lose 20%, that's really a lot. Yeah, and is it like suddenly people are less insured and something like that? No. So they still had 10% higher revenues. So they are really experiencing trouble in the business now, leading to high costs. But, we spoke just about bullshit, and we are the podcast Pub Talk where we call this kind of start out, right? But yeah, this was so cringe. The CEO, UnitedHealth Group, has embarked on a rigorous path back to being a high-performing company, and now it comes fully serving the health needs of individuals and society broadly. I mean, this is where I stop reading. Yeah, but okay, let's go forward. Then blah blah blah, and then as we strengthen operating disciplines, positioning us for growth in 2026 and beyond, for the people at UnitedHealth Group, will continue to support the millions of patients, physicians, and customers who rely on us. And there it comes again. Hold your breath. Guided by a culture of service and long-standing values.
Now, we're European, so we're going to struggle with this.
My God, I can't invest in a company that puts out such bullshit.
We're going to struggle with this. I mean,
isn't this the company where they do their best effort and they have incentives to do everything to avoid paying out when someone needs money for surgery or something like that? I mean, go on the platforms, you see all these very sad stories about how people are not being helped. Yeah, and then at the same time, people in Florida, I don't know, what was it the other day, a story about someone paying $4,500 per month, for healthcare. I mean, this is the same UnitedHealth Group.
It's crazy. I mean, we spoke about the difference in culture in America to Europe, and I think it's quite evident here. And you can see that in who we speak to online. You can see the Americans are quite passionate about this company, whereas we're like, no, I don't get it.
No, I it's really cringe what they are writing here. But anyway, on a fundamentals point of view, actually the company, if you forget a little bit about what's all going on, I mean, it looks really good, because they predict, so they had a downgrade, right? But even after the downgrade, they expect around $15 earning per share, $250 right now. That's not really expensive, but and this company is still expected to grow. This company is not dead. So on the, let's say on the technical fundamentals, that doesn't sound well, but okay. What I mean, purely looking at it financially, at today, it looks very nice valued. But then it comes to about the future, right? What do you expect for this company? And it's America. That's the other end again in America. It's shareholder first and senator first, who's probably invested there. So I have a feeling that this will come well, but I can't. For me, this is uninvestable. Such a company.
Yeah, I agree. I can see why, if you're based in America, you would, because you might understand that a little bit more. But
you understand the system,
But I certainly don't. I have a friend that was in had to fly to the States for an operation and asked for a bag of ice, just a bag of ice, and had to pay an astronomical amount of money for a bag of ice. It's great.
Wow.
I just could not do it. But hey, look, as you said.
Yeah. Well, if there are American listeners, because we know that a certain amount of people from America tune in here, please let us know what you think about UnitedHealth and what we don't understand about
Educate
this.
us. Educate us.
Yeah, educate us.
Dividend hikes, we've got a couple, but one that we will both really, really like is NN Group. This little Dutch insurance company just keeps chugging out these big dividend raises. So it is another 7.8% raise to €1.38 per share.
Yeah, what do you think about that? It's now 354
Yeah,
annualized.
yeah.
So
I mean, they keep going, and they're still expecting another 7-8% per year for the next 3 years as well. So this one has just performed incredibly. I mean, I have to give kudos to you. You brought it up on so many people's radar back a couple of years ago when it was trading probably in the early 30s.
in the
Yeah,
30s, it was when they had this settlement
yeah.
coming up where there was a lot of uncertainty, and then it went trading, and I think in the high 20s
Yeah,
even.
yeah. I remember you getting in the
Yeah,
high 20s, but more so the early 30s when you started gathering
yeah,
conviction, and
yeah, yeah.
I got involved then. But I mean, share price,
It's now
yeah, it's crazy.
62.
I'd find it hard to buy him at this price, but
Yeah,
I'm so happy I own them. I have to say,
my yield on cost is 9.6.
wow,
Yeah, but I know a guy from like 8 years ago, a Dutch guy who was buying NN around just after the IPO for 20
wow,
euros. So can you imagine his yield on cost? It must be 15,
yeah,
16%. And then I said like, no, and then because I was biased by where it came from. It came out of ING.
yeah.
Yeah. But then I started studying it and I felt like, shit, that's actually really good.
But the important thing is it's sustainable growth as well, and it's backed by
Yeah.
a really strong solvency ratio. So it's not,
Yes,
yeah,
208%. And maybe for people that don't understand a little bit about insurance companies, because we know this from our community, that's hard to analyze. The solvency ratio is effectively something that they also need to report on by the regulators. And it is effectively what gives you the wiggle room. How much are your obligations covered? Yeah. So typically what the dividend policies are like, if it goes below 150%, the dividend is at risk, and they usually have a target of between 170% and 200%. So everything above 200%, if you look at Munich Re, Allianz, NN Group, ASR, is good, and all those European insurers are now very fat above the 200%, because their businesses are just on fire. They're really on fire, and we feel it ourselves. I don't know for you, but my car policy insurance every year is like
yeah.
10% up or something like that, and I don't mind. I sit opposite with my advisor with a smile. He doesn't get it, but I earn from this. Yeah,
Right, so it's true. It's going so up over here as well. But what I find funny is we just spent 10 minutes bashing insurance, health insurance in the United States, and the very next company we speak about is a European insurance company that we're pouring over. So it's quite.
yeah. But look at the difference also in quality and
Yeah, yeah. I
performance.
mean, look, NN Group is like they're in life insurance, non-life insurance, those type of things.
And the yield is still better than United
Yeah, and the
Health.
dividend growth is also still better.
Yeah, yeah,
Nice. Ahold Delhaize had a dividend hike of only 1 cent. That's their interim dividend.
yeah.
What's your thoughts on that one?
Yeah, I expect a little bit more, but there's a lot of risk in their business at the moment with all that's going on geopolitically with the States as well. Remember,
Yeah,
65% comes
yeah,
from there. Generally, they were doing well. Also, they were claiming for the first time profit for their online business. So that was also very interesting. Actually, it was good report. So I have a feeling they're just very conservative with the dividend at the moment. Maybe the free cash flow doesn't look good enough, or there's maybe a little bit of risk around it. But the free cash flow is not much different than expectations, not much different than the last 2 years. So maybe they're coming at this stage where, because they had quite some rich dividend hikes over the last 5-6 years, that they're coming at this stage that it starts to moderate
yeah,
now a little
yeah.
bit. The stock went also more expensive, so the buybacks are having less impact, and the buybacks typically create space for growth in the dividend as well. So maybe it's all coming a little bit together now, and we might see just a few years of moderate
Yeah,
growth.
which is something that you typically see with these type of companies. And
Yeah, they go in S
yeah,
curves. Yeah.
we have a couple more. So Illinois Toolworks hikes its dividend by 7%. Clorox did a 1.6% dividend hike, and
Yeah, Clorox is struggling already for
yeah,
a few years. They had this really massive growth early in COVID. Everyone needed
hygiene.
stuff
Yeah,
to clean. Yeah, but it was not sustainable. Their cash flow was not. They had really issues with cash flow after that bump. And yeah, these 1.6%. I think in European style they would have cut the dividend probably already. But this American where they I can't do that.
And then one that might interest a few people is American States Water hikes its dividend by 8.3%. So those that like utilities, that's a nice hike.
Really solid.
We did have one dividend cut. This is interesting. Whirlpool, because I remember there was a lot of talk around that even in our community maybe 2 or 3 years ago. But it cut its dividend nearly in half. It's down to $3.60 from €7 per share.
I read a little bit about that, and the CEO, they're effectively creating space for themselves. They're struggling. All this geopolitics going on, but they also the CEO was also quite bullish on this actually, because they think that they can be competitive again in America by producing in America.
Okay.
Yeah, the issue has been always competition from China and everything with their machines, washing machines and everything.
It's so funny because I remember growing up, you would have like Whirlpool would be nearly in every household that you would go to now.
Yeah, but now it's
I just never see it. I never hear of it.
Yeah,
quite interesting. Yeah, not surprising. No more dividend cuts, so that's it. So we might have a look at our Q2 performance. And I know this is a little bit later because we both have vacations, we had guests on, and we're nearly finished Q3 by the time we're reporting this. But hey, we do this podcast. We're free to do this whenever we want, so we're going to do it now. And how did you do? Tell me, how did you do Q2?
My Q2 was very moderate compared to Q1. Listeners may remember that in Q1 I spent a lot of money that came available to me, also from selling some Apple shares. So Q2 I did mostly some cleanup, and because I brought a lot of money forward in Q1, I couldn't do the same in Q2. I had also some private expenses that were larger than normal, but not unforeseen. They were planned. So I bought what I bought was LVMH. I doubled down on some more Target when it went to 100. I initiated a position in LGEN.L. I bought a little bit of Nike more when it really dipped. I bought some more Novo Nordisk early on in Q2. A little bit of Chevron and some more HP Inc. So those are some shares that I bought, and I really wanted to use the opportunity at the time to buy more quality in the sense of LVMH and Novo Nordisk, because that was when Trump. We need to remember, it sounds like ages ago, but Trump announced these tariffs at the start of Q1. Yeah, really at the start. And then I thought, okay, I always say, like, in such market crashes, EDJ, please prioritize quality, because I'm always saying that quality is not available to me. And that's what I mean with quality are those high compounders on paper. Let's call it like that. Yeah, because I would call AD.AS also quality, but there's less growth expectation in there. So maybe that's probably what companies that have a higher opportunity for high growth.
Yeah, I get you.
So that's what I was prioritizing effectively. And I just don't understand Target's valuation sometimes. How is this company able to trade at $100? Yeah. I don't know what I'm not seeing. I know they had brand issues with all this woke stuff. I know they are more cyclical, but this sounds sometimes too weird for me.
But it was almost like a meme stock for a while, wasn't it? In terms of you had influencers and stuff constantly talking about Target. I spoke about my niece when I went to America. All she wanted was a video of me in Target or a Target bag, and that has kind of died down. So
that
might have had an element.
Maybe that's it. Yeah.
Who knows?
I also did my spring cleaning. So we are late in the summer, but that was still spring. So I sold out my Redea Corporation, the Spanish utility. I didn't trust management anymore after the dividend, what they did with it. I sold off my last bunch of Intel and Bayer that I still had, and I got rid of Viatris. I held probably a little bit on too long on Viatris. I went into it because they had a really interesting lineup after the spin-off from Pfizer at the time. But then they sold their biotech part of the portfolio. Biosimilars part of the portfolio, and yeah, suddenly I don't know anymore what the portfolio is
Yeah,
about.
yeah,
Yeah, I mean, Viagra is in there, but suddenly I don't know anymore what this company is about, and now it's purely a bet on management that they acquire the right
yeah, yeah.
products. Yeah, for that I feel a little bit too alien to the
I mean,
company.
Viagra can only keep you up for so long, so you need something. You need
Exactly.
something else.
No, but the fees is
Yeah,
changed, and I felt like, yeah, okay, I could keep on to it. I had a little bit loss, not too much. And I felt like, yeah, I can keep on to it, but there's so much opportunity cost out
yeah,
there. So I have this money then better working for me in Target, LVMH. LGEN.L, by the way, I want to be clear about that. This is a risky one,
yeah,
dividend wise as well. Chemical industry is having a very hard time. The CEO even quoted the hardest time in the last 35 years. It's draining. The cash balance, the cash on the balance sheet they're eating their cash at the
yeah,
moment. Let's call it like that, right? I bought it more as an income stock, income
yeah,
factory. It's nearly 11% yield at the moment. They will never cut it to zero entirely for many years. So, um, and if you see that it's trading at $50 now, so it's a little bit for me like in that if they cut the dividend, I will not lie awake
yeah,
from it.
yeah. I get you.
You understand
I
what I
get
mean?
you. But I struggle.
It's a conscious risk that I'm taking and very small amount in my
Yeah,
portfolio.
I struggle with them, especially when I hear you say that it's the toughest time they had in 35 years, considering they nearly
Yeah,
went bankrupt, what, 12, 13 years ago and cut their
yeah,
dividends. So to me,
yeah.
I'd struggle with that.
Yeah, no, I'm very
Mm.
honest on this. There's a little bit to spice up a little bit the high yield in my portfolio, purely for that. But when I'm talking about investing, I'm talking here not even about 0.5%
Yeah,
of my
yeah,
portfolio, guys. Yeah, so we need to keep it in perspective here. Yeah,
good.
yeah. My then the dividend, which is actually really why we invest, right? So this is interesting. April, my dividend compared to April last year was 32% down. In June, it was 10% down, but then in May it was
It's
88%
just
up.
timing.
I guess companies had a little bit of different timing and were more in May. Overall, my dividend income grew by 17.7%. I know there's contribution to this from my acquisitions over that time period. Yeah, but still, I mean, I'm not getting a 70.7% salary increase.
No,
Yeah.
no,
So my income from work is not growing at the same pace. So that's it. Yeah. So I send money every time to my broker, and then yeah, this is the return. It's real. So people that still doubt about after 10 years how dividend growth looks like, I'm still compounding my dividend income. Let's say at about 50, yeah, double digits.
yeah. I mean, it's been a quite enough quarter for you, but you're still growing.
Yeah, yeah, yeah. So if you then talk about terms of value, my portfolio, actually my portfolio declined 0.7% quarter over quarter. It has two reasons. One, I didn't deploy so much cash like like before, because in Q1 I had quite a hike spike compared to Q4, but also dollar.
Yeah,
Yeah, the dollar went from, was it 1.03, 1.04 to 1.16, 17 now, 16. That's 10%. That's a 5% impact on my portfolio. So, and on my portfolio value to deploy cash in terms of
yeah,
5%. Well, I'm not anymore at that stage of the cycle there. So for me, the cash that my portfolio grows like comes mostly from just price appreciation. I can't invest against it. When my portfolio would drop 10%, no way I have the financial capability every month in a quarter to compensate for
yeah,
that. Yeah, I can't buy against such a dip. Yeah, so that's just when your portfolio becomes larger. It's a new experience for me,
yeah,
actually.
yeah.
Very
And I wonder
interesting.
some of your dividend income. I know it's down year on year, but I wonder if there's currency.
No, it's 17%
No, but I
up
mean,
year
in
over
some of
year.
the months, April it's down, and I wonder
Ah,
if
yeah,
there's some
yeah.
currency in there. If you get me.
No, this was mostly
Yeah,
timing. Timing. timing of a few companies that just fell into May instead of June, or where they were last year just at the end of April and now in May.
Nice.
Yeah.
Oh, yeah.
My largest holding is now Microsoft, not Shell anymore. Shell dipped a little bit by 10%, while Microsoft, we've seen it, is now well in the $500. So it's all the time between them over the years, flipping a coin who's the largest. And my portfolio yield is now 3.83% versus 3.79 in Q1. So, and Shell continues to be the biggest net dividend payer for me.
No surprise. No surprise.
I'm very happy with the results. My PADI increased by 1.8 or 2%, not that much over time, and that's where you do see the dollar impact.
Yep.
Totally fine with this.
Nice update. It's, do you know what? It's quite a similar story for myself in terms of Q2. It wasn't planned, by the way, by both of us, but Q2, I didn't really invest a whole pile of money, and I explained this on the premium newsletter that we have. But at the moment, we're in this process of remortgaging and trying to get a loan, and we're trying to figure all that out. And there's lots of stuff with the bank. So during that time, I just wanted to have money aside in case we needed to get some stuff done. So, for example, we had to get a BER rating done on the house, which is an energy efficiency rating, and you have to pay for all that. So we kept kind of money aside that I just left built there, and as a kind of safety net. So I only really invested not a whole lot. So there was a couple of companies I bought. I bought a starting position in America because it dropped close to $78. Really small position, and I added some to Legal & General way back in, I think, in April. Other than that, there has been a total, and I say it's a quite one, there's been a total of 78 buys in my portfolio, right? But they've all pretty much been either reinvestments from DRIP, but also I have now 3 different buys on Trading 212. So I have the Noble 30, I have a Dividend Talk community one, and then I have my own one as well. So I invest into them each month automatically. Sometimes I forget to even count them because I don't check Trading 212, but I've started to make a habit. So yeah, 78 buys in total, which sounds like a lot, but a lot of them are fractional shares in that kind of portfolio. I also received a total of 92 dividend payments across all that. And again, Trading 212 are paying that, so there's a lot of fractional stuff there. So a lot of that is, I would say, meaningless, but it's actually, I haven't looked at it in 2 years. It's starting to add a little bit to my portfolio now, which is quite nice. So yeah, that's starting to grow. My dividend income in April was 467. It was 465 last year, so pretty much flat year over year. In May this year, it was close to 1,200. In May last year, it was 406.
Wow.
And then we see a little bit of a dip. Then in June, it was in June this year, it was nearly 800, 791. But in June last year, it was 1,020. So there was a small bit of a dip. But yeah, overall, it's up. You can see that huge jump from 400 to 1,200 is quite a jump, I have to say. But largely that's in part because I've expanded my positions in the likes of NN Group, ASR. I have a lot more European focused in my portfolio rather than America, which is probably why my portfolio didn't drop as much as yours during Q2. Because I think I'm a little bit more slightly skewed towards European rather than American at the moment. My PADI grew by 0.2%, which I'm actually quite impressed with because I didn't really invest any fresh capital at all. So it still went up by 0.2%, which I thought was quite funny. My largest holding is ASR, but it is starting to come down. So I think if you remember back a couple of quarters, my largest position was nearly 10, I think even more, 11, 12% of my portfolio. It's coming down to 7%. So I'm getting a little bit more balance across that portfolio. My largest dividend, again, is the Dutch insurance. Which one of us is Dutch? Me or you? I don't know at this stage. But my largest dividend is NN Group, which is 8.5% of my dividend. So that needs a little bit of work. But yeah, overall, quite happy. It's been like I would say a typical dividend growth investor, boring, not much activity in terms of what I'm doing myself, but the
Yeah.
automatic reinvestments, the dividends
But your
coming in.
portfolio is high, right? When did you cross the
I
100K?
crossed the 100K last, was it October, November, I
Yeah.
think. It was after I came back from Vegas. It's
Yeah.
over 130K now.
Yeah. Look at that. 30% more than, let's say, 9
Yeah,
months ago.
yeah, and
That's
that's
crazy.
that's probably been one of my quieter years in terms of investing.
Yeah.
Now I'll ramp that up in the second half, but it's
But you're probably, with the companies you have quite some capital gains, because British American
yes.
Tobacco, at what price were you
Oh,
buying
in
them?
the 30s, early 30s,
Yeah. Now, where it is, right? 40s.
40s.
Yeah. Then you have NN Group. Year to date, I believe a 45% increase.
Yep.
Yeah. So ASR is similar. So you have a few of those high yielders that you were interested in that really started to pick
There's
up
been
this
a
year.
couple, so you're bang on the money. NN Group is top of the pile. Then followed closely by British American Tobacco. Then we've got Brookfield Asset Management, and I think a lot of
Yeah.
people forget that I bought that when it was really low, and it nearly doubled about 2 weeks after I bought that, and
Yeah.
that contributed quite a lot. BAE Systems was another one that
Yeah.
I got in at a good price. Hornback, that went
Yeah.
from like it's over 100 euro now.
But you bought it in the
We bought in the
70s.
70s, yeah. So we've
Yeah.
been quite. I don't know if it's luck, but I mean, there's a lot of luck involved in that. But quite nice returns from them this year.
Yeah. Yeah. Exactly. Well, it's good for your portfolio.
I'm looking at targets done well. Yeah, I'm quite happy. I'm quite happy. But yeah, you have to take the good with the bad. But as I said, there's a lot more European companies in there than American, which is
Yeah.
benefiting me at the moment.
Yeah. Yeah. Exactly. Good. Hey, we have a ton of listeners' questions.
Let's get to 'em.
So let's get started, because we're already at the hour. And, I don't know how long people can continue running at this moment, because I always felt like 1 hour is good, but, we're stretching them now. And, if they're listening and you're still running, come on,
Keep going.
you
Keep
can do
going.
it.
Keep going.
15, 20 minutes
Yeah.
left. And if needed, pick up some water. And otherwise, just like continue listening. We'll try to make it not too boring for you. But these last 20 minutes, go on, do it. It's like dividend investing. It's not a sprint; it's a marathon. You
So
can do it.
here's a question then that's not going to be boring. Hugo has asked, with a possible 250% pharma tariffs and a letter to several pharma companies' CEOs to lower the selling prices, is the pharma sector in risk of becoming uninvestable?
Yeah, Hugo brings up a really, really good point. If this plays out, some pharma stocks in my portfolio, like AbbVie, they will be slaughtered. Yeah. So I haven't really got my head around this yet, so I can't give a meaningful answer. I wonder how easy this will be, because I assume that half the politicians are also invested in these companies. But then there is Trump, who couldn't care less about anyone. So yeah, I think there's a serious risk that I've been pondering with, but not. I don't have a clear thought on this yet. Should I buy protection? Maybe I never do that, but should I do this? Like, I don't know, a put option on one of the larger pharma ETFs or something like that to protect my portfolio a little bit in case this would happen. I don't know yet what to do with this. So if anyone has an idea, let me know. But this may be one of those unique times that I may consider a put option instead of selling them, but rather a little bit as protection to the portfolio.
Yeah, it's great. It's quite an interesting kind of landscape, isn't it? Like, you don't know how this is going to play out, so it's hard to really judge that. Would it make you want to move more into European pharma stocks? There's some quite...
No, because the European pharma stocks, they have most sales typically from the US, from that system that Trump is trying to change.
There is one that I was asked about, and I wrote on our newsletter, and I can't remember. Was it Romanian or was it from...
Yeah. I remember. I remember.
Name is gone for me. I might have to find it, but it was a really, really nice company. So there is companies out there in Europe that were
Yeah,
probably
but if we talk
investable.
about the top pharma stocks like Merck with Keytruda, AbbVie, all of those, most sales come from the US. It will really hurt the companies.
Yeah. It's such
It's a no-brainer. So yeah,
it's such a difficult time. But look, Trump is only going to be in office for 3 more years. So
yeah. But who comes next, right?
yeah,
We don't know.
We don't know. We got 2 questions, one from Eric, one from Domian, which are quite similar. So, if you have a dividend cut watch list, who is on it? And Domain has asked, we all love our swan stocks. Well, what about our S-band stocks, or sleep bad at night European stocks, because they are in trouble? So what's on your list?
So when it comes to dividend cut, I definitely believe that UPS is now yielding 7%. I don't think they will cut the dividend yet. I don't think so. But this is clearly a company that I would not sleep well at night with. We spoke several times extensively on this company. We didn't understand why they would do a 50% hike. Remember that one?
Yeah, it's crazy.
We don't understand. We didn't understand a few things about this, and the pension obligations on the balance sheet were always an issue to me. So UPS would not be one that I could sleep well at night with. Generally, I don't sleep well at night with. Well, I actually sleep really well because my portfolio is very well diversified. Yeah. So, but if you think about a few stocks, I think Novo Nordisk is one. I'm not saying it's not on the dividend cut watch list, but more the second part of the sleep bad at night. I don't sleep well at night at the moment with Novo Nordisk. Way too much volatility for my liking.
Yeah.
If I'm truly honest to myself, I have conviction in their products, but I don't have conviction in the lack of patent protection at the moment. So it's really not an easy one. Not an easy one at the moment. If I have others on the dividend cut watch list, PepsiCo a little bit.
PepsiCo is a staple on my list for quite a while.
Yeah, I think it's the last thing management will ever try to do. But if you look at all the fundamentals, I think PepsiCo could be on dividend cut watch.
I wonder if there's some UK stocks that we could probably put in there. I know there's a lot of pressure in the UK at the moment. Maybe someone like Vodafone usually cut their dividends, or someone like Orange or something. But yeah, PepsiCo was one I was going to say. You brought one to my attention, which was that CCOI. If you remember, I spoke about them.
Yeah.
So they had this Sprint acquisition that I'm going to look into a little bit more. Seems to be putting a lot of pressure on them, which is affecting their cash flow. So potentially, when I look into the numbers, that might go onto the list. Yeah,
and LGEN.L is of course also on dividend cut watch list, even though I bought a few shares.
Yeah, for me that would be up there. Philippe has said, in the spirit of the recent post, smoking, drinking, gambling seems to be somewhat declining and not so popular among younger generations. What companies or sectors, as it may be easier to select, do you see benefiting from change in habits, and which we might create the next Visa so we can hop on early?
Yeah, TikTok, of course, right? If it comes in Meta sense or something like that, that would be a good one. So I still think PayPal with Vimo.
Yeah.
I mean, this Gen Z generation is so alien to me.
Don't worry, we'll have a depression or something, and everyone will go back smoking and drinking and gambling. We'll be fine.
Oh yeah, who sells those? Who sells? Is it Ritalin or what's the what are the medicines for depressions and everything?
Oh, I don't know actually.
Yeah. But I think that would be a company to invest in, definitely. Maybe not where he expected the conversation to go to, but yeah.
It's quite a difficult one to say, because
but these younger generations, they also want to get married one day, and they start drinking. Yeah, and Vaping actually is quite popular among the
Vaping
youth.
is popular, so maybe British American tobacco.
Yeah.
But then technology, you think of like we talk about AI. Like there's going to be something you mentioned TikTok. There'll be something like that. Maybe the next YouTube that will be
Yeah, but also OpenAI and such, right? I think those are because I mean, kids now already, even my son, 13 years old, is using ChatGPT. Yeah,
yeah.
and then sees no reason to read a book if he can use ChatGPT. That's literally what he
I
says.
mean, there's people using it like a web browser at the moment. it's it's
Yeah,
it's
yeah. So I would go more along those lines. Probably Roblox. I still think is really interesting for early teens. Yeah, here I don't know if it's
yeah.
investable, but to explore continues to be something big, I would say.
But in terms of
Netflix as
yeah,
well.
in terms of next visa, I do think along the lines of like a digital currency, blockchain. There'll be something along those lines that will
Yeah,
come out and
exactly.
disrupt it. I don't know what that will be,
No.
but yeah, I would not be surprised to see some because we know Europe are bringing in something. America have all but said.
Yeah,
I think this Genius Act came out a couple of weeks or
yeah,
last week, which is basically saying they're going to tokenize their currency at some point. So you
yeah,
imagine something like that. So
yeah. Yeah, Philip, I'm afraid that we're not really
no,
helpful
British American
here,
tobacco
but
is
I
the
hope it
best.
sparked a little bit of
Yeah,
ideas.
British American tobacco.
Just remember, if they will get married, they will start drinking. If they won't get married, it's probably depression. You need to figure out what medicines those are. I forgot the name and find the company behind
Exactly.
it. Probably we have it even in our portfolio,
Yeah.
this company.
David has asked, what metric is more important for safeguarding the diversity of your portfolio? 1, dividend income percentage per stock, or 2, percentage of stock banks in your portfolio?
The first one, dividend income, because I'm an income investor. So if my income would drop significantly because of a single stock, then I would be more in trouble than if one with a high percentage but almost no yield. Yeah, I would suffer more. Microsoft is my biggest position. If they would cut the dividend in half, I would almost not feel it. Shell's my second position. If they cut the half, I would feel it.
Yeah. Yeah. I agree. I think I kind of mentioned my thoughts on that when I was going through my portfolio.
Yeah,
NN Group is what 8%, and I want to trim that down. So yeah, I think the first
yeah.
one.
But you will not trim it. You will make sure that others around it will
Exactly,
grow,
exactly.
right?
Yeah, I'm not
Yeah,
selling.
yeah,
Gee, I'm not selling.
yeah.
Why would I sell something that's growing at 7% dividend every year for the next 3 or 4 years? Matthew has a nice question. If you could change your top 5 holdings to whatever you wanted, and valuation wasn't a consideration, how different would your top 5 holdings look today?
Cool. Yeah. For the first time, some Visa would be in there, maybe. But let me quickly check. I have even a list for that. Where is it? I would have. No, there's a filter on it. Let me check. I would have more. I would have L'Oreal on the top 5. Probably Agree Realty Corporation in the top 5. Yeah, I think those two. So I would hope to have Microsoft and Shell still in the top 5. AbbVie would not be needed. Unilever neither. So probably Microsoft, Shell, L'Oreal, Agree Realty, and maybe ASR could be in there, or maybe Siemens or Johnson Johnson, something like that.
Yeah, yeah. I'd probably have. I would have Siemens definitely in there. Siemens would be in there. Microsoft would be in there. I would probably look at a company like American Express over Visa. I do like American Express as well.
Yeah,
But I mean, you can pick Mastercard, Visa, American Express.
yeah.
You're getting good growth. What else would I have in there? I would like to have a tech company, which I don't have. Whether it would be
Yeah,
Facebook when it dropped off the face of the earth there a little while
yeah,
ago,
yeah,
Google maybe, something like that, and then after that, then it would be someone like Realty Income for that steady growth.
Yeah. And why not Agree Realty?
Agree Realty.
This is the debate that
Yeah,
never
I mean,
ends.
it's the little brother. There's obviously more growth there, but look, Realty Income is around a lot longer. It's a bigger company.
So we have a question about that. Maybe we'll address it straight away because where is it? Yeah, Furman is asking us what the hell's going on with Realty
I didn't know.
Income.
Did our share price drop?
No, it's just not going anywhere.
Yeah, but I mean, it's not one year that you're going to buy for the share price to keep going up and up and up. I don't think it's just steady dividend income. It grows. It's been flat for almost 4 or 5 years in terms of its share price, but you got a 5.62% dividend yield at the moment. Slow growth, compounding. It's consistent. I mean, I'm not.
It's the interest rate,
I'm
guys.
not too concerned.
The moment interest rates go down by the Fed, you will see Realty Income climbing up.
Yeah, but there's a lot of pressure in America at the moment as well, isn't there? And the whole narrative from Trump is probably not helping this either, because he's constantly talking about interest rates and stuff. So it's probably not helping him. But we have seen Agree Realty grow in this same period. But they're a smaller company. We have to remember that. So there's more runway there. Next question, forever learner. Do you switch on drip for high yielders such as BTI? I have drip investing turned on.
Generally, if I have an option to turn drip on, like in interactive brokers and such, I do it the majority of the times. Yeah, unless a position is so big that I don't want to increase it anymore, but otherwise I just do it. And I really like that interactive brokers offers this now. So now my Johnson & Johnson share dividends are automatically reinvested. Agree Realty as well. I really enjoy it. I really enjoyed it. I know these are fractional shares that I'm not a big fan of, but still, I don't need to think about it.
From a maintenance point of view, it's a pain in the ass because I told you 92 transactions or something. So it's
you need to log them, and for me, it also means for the tax, I need to all put them in the rows and calculate.
But I turn it on. Why not? It makes my job easier. Sebastian has asked, are we using stop loss and take a profit? I'm a hard no on that. I've learned my lesson. Microsoft has taught me that very well.
I used it when I didn't know yet what investing
when you were a trader, just say it. When you were trading.
Yeah. Well, I don't know what I was, but then when I was 25 years old or something like that, I think the only one that earned from stop loss was the broker.
Yeah, of course. They're happy.
Because it triggers a lot of transaction costs.
Reunion has asked, right? It would be interesting to hear your opinions on the tariff impact on both the EU and US side. He knows we don't really think about it, but everybody will have to face the fact that this is going to impact a lot of companies financially. And what industries do you think will be impacted the most?
Yeah, so I mean, we see it already coming in the earnings, right? Tariffs are often quoted. I was looking at what's called ADM,
Daniel Midlands,
and they're talking also about geopolitical demands in the crushing business or something like that. So it's all there. The issue is with macro. I'm educated in it, but I don't spend a lot of time thinking about it. So I find it hard to really say something about it. So if you think, so simply said, yes, products will get more expensive, specifically in America, to the American consumer. And depending on the pricing, and depending on where the company is in the supply chain and how much competition it has, it will either get paid by the consumer or by the company. So if you're in a very competitive market with pricing, it's hard to pass it on to the consumer. Yeah. If you have some more moat and pricing power, it will be paid by the American consumer. I think that's the main distinction you need to make when you're looking into individual companies. What's their pricing power? Can they pass it on to the consumer or not? Because otherwise it will go into the cost of goods sold. Yeah, that's one. Also, we should not forget that many of those companies have already plants or are building plants in America. We know that Siemens committed already a lot. They were doing it already, but now they just put a wrapper on it and sold it to Trump, saying like, "Hey, we are investing a lot here." Because for also, if you think about Fuchs from Germany, they typically have strategies that they want to be close to the customer because they believe they can serve their customers better when they're in close proximity. So yes, there will be some impact, of course, there, but generally many of those companies are already a bit set up that they try to produce more closer to where it is. And specifically, if you're a company like in the pharma space, you talk about products with super high margins. So whether you're probably already more in the high cost countries when it comes to terms of production. So, but I think the car industry in Germany will be hit very hard with this tariffs. And for us, our portfolios, this can be impacted if you have companies that rely on the car industry, if you're a supplier to them. Yeah, so I don't know if you produce plastic chairs for that metal steel producer. I think those industries will be hit hard, probably.
Do you think these tariffs will be here to stay? I honestly think once Trump is out of office and we might
I
come back
know.
to some bit of normality. I don't see these lasting forever and ever and ever.
What I do think is that, and I base this on what I saw on I read some news sites and some have comments under it, and when you go through the comments you can see the sentiment, and the sentiment is totally different than the bubble that we live in. So if they read that Shell makes profit, the whole comment section is full about like how they should be punished and how unfair it is.
Yeah, of course, we've seen that during COVID.
The majority of society wants higher taxes, tax the rich. That's clear to me, right? Fuck, I lost my train of thought.
I mean, we're 1 hour 20 minutes into this. I don't blame you. We have a couple more questions though, so we will try and get to these. So Yield Master has asked us, why do UK investors consistently fall into yield traps while European DJI investors seem to be more disciplined about coverage ratios? And he's given a couple of examples. Vodafone /shares 50%. Legal & General is trading at a 0.9% coverage ratio. So he's asking what the difference in the mindset is. And
I don't know. It's the first time I hear that UK investors are so much only looking at yields.
I mean, I don't think you could brand the whole nation into a certain type of investor. But what I will say is the UK market at the moment, I mentioned it earlier, it is struggling. It's been struggling since Brexit. Let's be honest about it. Yeah. There's been something happening since 2018 constantly over that, which has caused high yields in some of our companies. And that's probably why, if you live in the country, you know a little bit about it. There's a little bit of home bias, so you're probably going to you're probably going to invest in Vodafone over, say, someone like Orange, because you use Vodafone, you don't use Orange, and so on. So maybe that's a little bit of it, but it would be good to get a good UK dividend investor on and maybe put this question to them and see what their thoughts would be. Exactly. Stefan has asked about Johnson & Johnson. Their executive vice president, John Reid, sold over 3 million shares. In general, how do you deal with insider sales?
Not really. There are hundreds of reasons why CEOs and insiders can sell, whether it is like they want to buy a house, they want to diversify a little bit their wealth, or they think it's too expensive. There's usually just one reason. Well, there are two reasons why you buy, I learned, but usually the popularity saying is there's only one reason why a CEO buys their shares, and that's because they believe it's worth more. What I have seen is with General Electric that the whole board started buying shares at the time at $16 pre-split. Remember this one? And I think it was so foolish, and because new management came in and they wanted to show how much they believe in their own company. But I have a feeling that they might have not deeply believed in it, but just wanted to prop up the share price. So do watch out still a little bit when you see that behavior.
Luke has asked us from the Wall Street podcast. So he's asked us about this poll on our Discord in the last few days for international community members to suggest their favorite local dividend growth stocks. What are some, maybe pick one each, which are your personal favorites of the wide selection that was put forward?
Yes, of course, Ahold, ASR, and ASML, those three from the Netherlands. I really like them. Shell as well, that's 4. From the UK, I do like British American Tobacco and Legal & General, even though we just got challenged on the high yield there. I do like also Investor AB, actually, and also they have a large position in Atlas Costco, so where they just did a review on, and I am interested in KESKO to learn more about that from Finland. And I hear only good stuff about SAMPO all the time on Facebook. So also stock, that's very interesting.
SAMPO does indeed pique my interest. But if I'm to pick, I'm surprised you didn't pick the Pharma. But
sorry, I didn't get to German yet one, but the Pharma is definitely also on there.
So I would go. Oh, so you picked one per country.
I just picked everything that I saw in there that I liked.
which was nearly everything.
I'm not making it easier for Luke.
No. Hey, but look, if I was to pick, I do really like GLB.IR. They're in the nutritional supplement market, but it is really competitive. But I mean, it's a
they're on the high protein
on
train,
brand,
right?
It's a company that was literally born about 300 meters away from where I live, so there's a bit of homeboys there, but I do like GLB.IR. Shell is there, UKW, UK Wind in the UK.
The UK Wind is
an investment trust,
struggling at the moment, right? A bit.
But that's the sentiment in the UK, full stop. But I'm pretty big on renewables. I do quite like renewable energy. It's not there, but I like the Spanish utility Iberdrola as well.
Iberdrola. That one could also be in my top 5.
Iberdrola, I forgot about them. El Cuba, what are your thoughts on the CEO replacements of Procter and Diageo?
Actually, El Cuba, I've not yet looked into that. Diageo definitely needs a CEO replacement because management was really squandering the business. About Procter, I can't say anything. I don't know who the new CEOs are in both, so I can't answer the question if there will be a recovery and that they will start growing again or grow faster.
Yeah, same here. And do you know what? We'll finish on this question. There's 3 more after this, but they're all around stocks. I can see it in your eyes. It's getting close to 1 a.m. where you are, so we'll push them to the next episode, right? So we'll finish on the World Investor. Can you make one bear case about Legal & General? Why should I not invest in them?
Because the UK economy is shite.
I was not expecting that. I thought you were going to say the business is too complicated, insurance, and they sold off part of their business, the US part. I thought you were going to say any of that. I was not expecting UK shit.
No, but no, they are big in real estate in the UK, right? So the real estate market collapsed there. Yeah,
there is one.
What about you? You can't escape from this one.
Yeah, because the UK market is shite. Yeah, but for me with insurance companies, they're always risky. There's always risky, but I can see that he's topping up in mid-sized positions. So if it's going from mid-sized to a full position, I think it needs to be a little bit more safe. I invest it's a small position because of the high dividend yield.
Me too.
It's more of an income play. I don't know if I'd be comfortable to have that the same level as NN Group or ASR, for example.
No.
So yeah, that's
same here.
So we'll leave it at that. We'll take Many Mysteries, Keep Walking, and BAM for us in the next episodes because there's some companies that we have to look into. So As always, thank you for listening. If you're running, you've ran for 1 hour and 20 minutes. That is amazing. I could only probably do 5 minutes. So you did well. But look, as always, we see from the statistics, we do get a lot of people sticking around this long. So thank you. We really do appreciate it. Please, if you haven't already, I mean, if you've listened this long, you might as well join our Discord, our Facebook, our Twitters. You might as well just jump on board and join the conversation. And we will see you all next week. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.